Hey, hi, hello everyone. Welcome to Financial Freedom YouTube channel. I wish you everyone very happy new year. In this special episode, I am going to talk about one of the hot topics in current time. Well, everyone talking about investment, savings, and stocks. If you are wondering which stock to invest or how to analyze a stock, don't worry. In this video, I try to cover basics and fundamental about stock investing and how to analyze a stock like a professional. I have separated the whole video into 4 topics. Why should analyze a stock before investing, how to analyze a business, or what is a successful business, and fundamental analysis of stock, and finally we have technical analysis of stock. At the end of the video, you will get to know about what is investing and how stock and stock market works, and how much impact a successful business will make on your stock price, and how to analyze a stock fundamentally and technically. Let's get started. Let me ask a question. Why should analyze a stock before investing? Well, before answering to this question, let me explain few basic concepts of stock and stock market. So the main idea behind issuing stock is starting from any business. For example, if company called A wants to start a business, and when he had started and established that business, that company wants capital to run the business or survive or to grow. So they have several ways to raise the capital they need. In that, issuing stock is one of the ways. When they are issuing a stock, investor will purchase the stock and gets a portion of ownership in the form of share, and company will receive money to grow their business or run their business to make profit. Here, take for example, an investor invests some money in that company or any company. In return, he or she is having shares of that particular business. Now, investor will be benefited in 2 ways. One, whenever the company make profit, investor will expect share from the profit. So as long as company making profit, investor will get the profit in the form of dividend. Before telling about another way, now the investor wants his or her money back due to some personal emergency. So they are ready to receive back that money from the business by returning their shares or stocks to the company. But here another investor who is also ready to purchase those shares for some amount. Since that company making very good profit and everyone wants to be the part of that company, demand for the stocks increasing rapidly. Now that old investor, instead of selling those shares back to the company, he or she ready to sell to another investor. Now due to the demand and supply, the share price of the stock continuously increasing and everyone wants to buy the share. Due to the huge demand and less supply in the market, share price starts increasing continuously. To accommodate this kind of transaction only, places like stock market is established and anyone can buy and sell all the listed companies in the market. So the key point here is supply and demand in the market will determine the share price of a stock. When there is a huge demand and less supply, stock price will start to increase. When there is more supply and less demand, stock price will start to decrease. Now the next question is, which stock will get more demand? The answer is very simple. Which company making more profit and running successful business and its stocks will get more demand since so many investors are ready to purchase its stocks. Now coming back to my previous question, why should analyze a stock before investing? Now you got the answer right. Now let me ask a second question. What is a successful business? Before understanding about successful business, first we try to understand what is a business and how to run a business. So the idea is very simple. When a person having fantastic idea, he or she wants to make profit out of it. To start a business, they need capital. So there are several ways we can raise the capital. One is owner money, the another one is from shareholders, or issuing stocks, and finally we can issue bonds or take loan from banks or institutions. So these are the ways. Once owner raises capital, it's time for investing those capital efficiently into purchasing of machines, land, or recruiting employees, and to start the business. Whether it's a service-based company or product-based companies. To run any business, working capital is needed, raw material is needed. Once product is ready, now it's time to sell the product and make revenue. And after deducting all the expenses like operating cost to produce the product, salaries to the employees, due to the suppliers and vendors, and interest to the loan lender, and finally tax to the government, now organization left with net profit. Now organization may retain their profit to invest in their business or declare dividend to themselves or shareholders, or now paying back long-term debt. So this is how business runs in short. Here we see there are several factors associated with a business, from capital to run the business to selling the final product. A successful business is one who strategically raise the capital and efficiently utilizing those capital to generate more revenue and make profit and make shareholders happy and growing together. So we cannot give any specific answer to this question, since taking loan to run a company is beneficial for some type of organization. At the same time, taking a loan is tragedy for some type of organization. But ultimately, for any organization, the goal is to increase their sales and keeping expenses too low and to make more profit and efficiently utilizing those assets and keeping themselves from worse situations like bankruptcy. Now, you may ask how to identify a business like this. Well, answer is very simple. We have to study their financial statements, then only we can conclude how organization running their business. Now, we will see how to analyze a stock's fundamentals. If you are new to stock market or already in the market, you will often come across these two words. One is fundamental analysis, the second one is technical analysis. In fundamental analysis, there are three topics: financial statement, ratio analysis, and stock valuation. Let me start with financial statements first. Before that, financial statements and key ratio analysis is very big topic and I cannot explain in one video. I try to cover all the basics about these statements and the ratio analysis. I will make separate video for financial statements in upcoming weeks. So in financial statements, generally company publish three statements. One is profit and loss statement, the another one is balance sheet, and another one is cash flow statement. Profit and loss statement. As name suggests, in profit and loss statement, we can identify how much profit or loss a company made in a particular year. Since all the statements are made annually, it just represents the entire year's sales and profit. So from this statement, we can study how much revenue is generated and what is cost of sales, operating profit, how much depreciation and amortization deducted, and how much interest is paid towards loan or debt, and finally how much tax are paid to the government. With all these deductions, company left with net profit. From this only we can conclude or we can calculate earnings per share, return on assets, and return on equity. So in short, profit and statement start with sales made by the company and ends with net profit at a particular period. Balance sheet statement. These statements plays major role in identifying company's financial positions like asset, debt, and liabilities. Balance sheet is nothing but a snapshot which represents company's asset, liabilities, and equity and common shares outstanding with respect to the day balance sheet is made. For example, the balance sheet is made today, it just represents entire financial position of the company respected today. If it made on next week, in a company release balance sheet along with other financial statements, we can get to know how much asset company has as well as liabilities company has and equity company has. And finally, number of common shares outstanding. In asset and liabilities itself, we have two major types. One is current asset and current liabilities. The second one is non-current asset or long-term asset or long-term liabilities. So with this statement, it will help us to conclude that this company has less debt comparing with asset, so we can invest in this company. Or this company has more debt when comparing with asset, so it's not very good decision to invest in this company. So as I said, this is a very big topic. I will try to make a separate video on this in upcoming weeks. Now we will see final and important financial statement, cash flow statement. So this statement made from other two statements. Main objective of the statement to identify how much money is coming into the organization and how much money is going out of organization. As well as from this statement we can identify sources of cash. For example, if company purchases a land or machines for growth, we need to know from where they got this money, like whether they got from money from the profit or they got this money from the finance like getting loans or they getting money from selling their shares or old plant or old machineries. So these things we need to know. These things we can get to know about from these cash flow statements. So the cash flow statement is categorized into three major categories. One is cash flow from operating activity, another one is cash flow from investing activity, the third one is cash flow from financing activity. Now we have all the financial statements in our hand. Now how to study this? Well, to study these statements in detail, we have few key ratio analysis. This key ratio we can understand how company and business is going. Like financial statements, key ratio is also a very big topic and I will make a separate video on it in upcoming weeks. As of now, let's try to understand what is key ratio analysis or what is ratio analysis. So now we have three statements and so many elements in the statements like sales, net profits, earning per share, current assets, current liability, non-current asset, non-current liability, equity, reserves. So what you are going to do is all these things. To simplify this, ratio analysis made. So ratio analysis is classified into three categories. One is profitability analysis, second one is valuation analysis, and third one is liquidity analysis. In profitability, we have four key ratios. One is return on equity, the another one is return on asset, and another one is return on capital employed, and finally we have net profit margin. So in valuation analysis, we have four key ratios. One is PE ratio, that's nothing but price to earning ratio. Another one is EV by EBITDA. So EV is nothing but enterprise value, and the EBITDA is nothing but earnings before interest, tax, depreciation and amortization. So PB ratio, price to book ratio, and we have finally price to cash flow. In liquidity analysis, we have four key ratios. One is debt to equity, the other one is current ratio, and third one is interest coverage ratio, and fourth one is quick ratio. Still, there are so many ratios can be made and very useful to study the company. In upcoming weeks, I tried to make separate video on this particular topic. Okay, now we have seen that what is basically financial statement is, ratio analysis. Now we need to take decision whether to invest in the stock or not. For example, we have identified a potential stock which has a strong business and financial position and key ratios also showing positive results. But is it just enough to invest in the stock? Well, answer is no, because we need to consider stock price at that moment. Even though all the other things are positive, but stock price is really high, we must consider stock valuation. A wise investor always invested in the value stock or just wait for some time to invest in the stock when price is corrected. This is what one of the legendary investors, Mr. Warren Buffett, is following. Okay, now you may ask how to identify what is right price to buy stocks. Well, we will see those things in ratio analysis and technical analysis. Now we are at the final part of this video, that is technical analysis. In investing, technical analysis is often ignored, but once you understand its purpose, you will get to know about how to use technical indicators to improve decision like when to buy stock or when to sell. In any business, identifying the market trend is more important, and forecasting demand and supply also more important. Same way in technical analysis, we try to figure out trends and patterns in stock price as well as deciding when to enter or which price to enter. With the help of technical indicators like moving average, RSI, support and resistance, trend analysis, pattern analysis, candlestick pattern, and CAGR, which is compounded annual growth rate, we can understand the current position of the stock. While investing, we must understand stock's nature. In the past as well as in the future, we try to get into the flow. For example, if a stock had been growing at a rate of 20 CAGR for past 20 years, and suddenly if stock starts to grow 35 to 40 CAGR in recent 5 years, it often corrects and returning to its original pace in next 5 years. So that in long term, it will be growing around 20 to 25 CAGR. If I explain these things with an example, it will be easier to understand. Now let's see an example for when to enter a stock or which price to enter. A classic example is share price of Tata Elxsi. So in the chart I have given two prices. One is current price trend and another one is as per 2017's forecast. So the idea behind this chart is it just projects two different trend lines. One is purely based on forecast made on 2017. As per that forecast, stock price must be reached 2,350 rupees, but currently share price is around 6,000. It just grown so much in recent times when comparing with past growth. If you are following long-term share growth, we can wait for some time to stock price to decrease, then only we can enter. In mathematical term, from 1990 to 2017, share price have grown with a rate of 20 years CAGR. If it just follow the same pace in next 5 years, the share price must have reached around 2,350 rupees or around 2,400. But after 2017, stock price have grown at the rate of 45% per year, and currently it was around 6,300 rupees. So even it has touched nearer to 11,000 in past 1 year. So here we have to take decision wisely. And for your kind information, this is not any stock recommendation. This is just for education and example purpose. Now let's see another example for when to exit a stock. For example, today I have purchased a stock at 100 rupees per share and have set my goals as follows. First goal is, as per the past 20 years share growth, if stock price is going to grow at the rate of 15% per annum, the stock price must have reached 200 rupees. The second goal is, if the stock price just going to follow the Nifty trend, which is 12% per annum, it must have grown to 175 rupees. If the stock price is going to grow at the rate of threshold limit, which is above fixed deposit or any other kind of government investment schemes, like 8 to 10%. Here I am taking my goal as 10%. If the stock price is grown at the rate of 10%, it must have grown up to 165 rupees if I take 10% as CAGR. Here you can see the stock price is growing at the rate of 15% per annum for next 5 years. Here you can see the stock price is going at the rate of 6%. Here you can see 6 years CAGR. For next 5 years, the price must have reached 134 rupees. In this case, if stock price have been moving between this range, I can hold forever and sell only when money is required. If the stock price is not growing and falling below my threshold limit, I may look the business and proceed to exit if financial position of the stock is not in good condition. This is the one of the techniques to identify when to buy and when to sell. So one video is not even going to cover all the topics in technical analysis, but this is the most used by traders, but it is also useful for investors who is going to invest in the stocks. I tried to cover all the important major topics related to stock investing. Well, what's next? Have planned to analyze all the stocks in Nifty 50 in each week. I will go with alphabetic order. Next video I am going to analyze a stock called Adani Enterprise. So in this video we will see in detail how to analyze a stock business, fundamental analysis and technical analysis. This video as well as upcoming video only for a demonstration and educational purpose. Do your own research and analysis before investing in any stocks. And we came to the end of the video. I hope you have enjoyed this video. If you have liked this video, please consider subscribing to my channel and please like this video and share it with your friends. And if you have any doubts, please leave a comment in the comment section. Thank you.